Welcome to the Women in Impact series, also known as WinImpact. We bring together leading women in impact investing to talk about the innovations and challenges for financial advisors who want to offer impact investing options. Today, we have a guest who has experience on global sustainability programs with an emphasis in climate change. There's so much to address with climate change, and we're looking forward to our guests breaking it down and making sense for us. I'm Rosanna, and this is Emily.
We're your hosts for the WinImpact series, and today on episode 4, we're talking to Sharadiya Dasgupta, who is the founding partner at Blue Dot Capital. Blue Dot Capital is a boutique sustainable investment consultancy that works with asset managers on the development and implementation of ESG and impact investing capabilities across asset classes. Before starting Blue Dot, Sharadiya was the founding managing director of Total Impact, where she oversaw the development of new ESG resources and initiatives with the goal of mainstreaming sustainable investing. Prior to Total Impact, Sharadiya worked in corporate banking at Axis Bank, which is India's third largest private sector lender. Earlier in her career, she held product strategist and institutional client roles in asset management firms. In her 15 years in financial services, she has worked with a diverse array of capital allocators that includes corporate treasuries, endowments, foundations, family offices, faith-based institutions, and community finance organizations. Sharadiya, welcome to the show.
Thank you so much, Emily and Rosanna, for having me and that very warm introduction.
Absolutely.
Well, it is great to have you, Sharadiya. Jumping into it, ESG has been cited as a hot topic in the alternatives industry recently. And Preqin's latest fund manager survey results show that 83% of surveyed general partners believe that ESG will increase in importance over the next 5 years. What are your thoughts on this?
Right. We are seeing strong interest in ESG integration across the board in the alternative space. Private equity, given its long-term holding and the ability to engage with management companies and affect change, is leading the conversation when it comes to ESG integration. Investment teams are looking at ESG integration right from origination, diligence to exit. Their portfolio operation teams are engaging with portfolio companies and not only addressing ESG risk, but also improving ESG outcomes in areas like energy efficiency, water and wastewater management, emission control, diversity and inclusion, community relations, etc. So across a host of topic areas. And also, just anecdotally speaking, I'm seeing a lot of interest in ESG and impact in some cases from startup and emerging managers. They want to build in ESG into their thesis right from the get-go. Mm-hmm. However, I wouldn't want to give the impression that it's only private equity that's thinking about it. Like I said, this is across the board in the alternative space. So private credit, real estate, infrastructure, long only, long short hedge funds, they're all thinking about innovative approaches to ESG integration.
That's great. And it's really just so fascinating to see the growing interest and diverse implementation around ESG. But impact investing is a really broad topic with sub-themes like the E, S, and G of ESG, environmental, social, and governance characteristics. So I want to dive into the themes behind Blue Dot Capital's philosophy. Your firm focuses on sustainable investing in particular. How do you define this? And do you specialize in a particular niche within the space?
Right. So as you correctly pointed out, ESG and impact investing does encompass very diverse themes and issues and topics. So the slide that you have pulled up sort of lays out the entire gamut of what sustainable investing entails. So there is negative screening, and then we move on to ESG investing, and then there is impact investing, and then there is more traditional philanthropy. Blue Dot Capital works squarely and firmly in the middle of the spectrum. So ESG investing and impact investing, that's what we focus on. sort of for the sake of being on the same page in terms of definitions and lexicon, ESG investing is the process by which environmental, social, and governance factors that have material impact on a firm's financial performance, but are typically not captured in financial statements, are used to complement traditional research and investment analysis. So in terms of implication, it has two broad applications. One would be risk management. It contributes, by adding that added layer of material information, you are enhancing your risk management capabilities. And then there is the potential of long-term alpha generation. Impact investing goes a step further, and it is investing with the dual goals of achieving financial returns, competitive financial returns, and other impact goals like financial inclusion, clean energy, sustainable agriculture, women's education, and low-income communities. So again, it could be a variety of impact goals that investors want to achieve. So we work with asset and wealth management firms, like I said, within that ESG integration to impact investing portion of the spectrum. And we work with investment management firms our clients, and we start engaging with our clients when they are at a relatively early stage of developing a formal ESG program. So they have a commitment to ESG, they're intellectually curious about it, and that's the stage when our work starts with them. So again, referring to the slide that you have pulled up, we start at developing the thesis and the framework. So we work closely with the leadership team, develop a thesis that is most suited to the firm's unique investment philosophy and style and their expertise. Thereon, we go to the integration where we work closely with investment and operations team in operationalizing the thesis. So how can we sort of the framework that we have developed, how do we actually embed it into the day-to-day investment decision-making? And then there is, of course, thought leadership, research, and investor communication that we help clients with. So that's sort of the gamut, and that's how we work with our asset management clients.
That's great. And I really like the formula you mentioned earlier around the dual goals with impact investing, where impact investing equals financial returns plus impact goals. It's great to know that we are heading in a place where we have thought leaders like yourself that can actually execute this and make it a reality. And so that was very insightful, very interesting. Switching gears for a bit, in addition to feeling very encouraged about emerging investment managers taking an interest in integrating ESG early on in their business life cycle, at Blue Dot Capital, you've helped investors and advisors implement sustainable investing across many asset classes. At Just Invest, we are very familiar with the screening and inclusions that advisors apply to equity in client accounts. How does impact investing look like in other asset classes? Could you give us a broad overview of how it compares from one asset class versus another?
Right, yes. Let me take a crack at that. And thank you for that question. I must admit that I really enjoy illustrating the opportunities across asset classes.
Great.
To make this a little more tangible, let's pick two impact themes. Let's pick climate change and racial equity, the two issues and topic areas that are never not urgent. So, on the climate change front, within fixed income, you have green bonds and sustainability-linked loans that track a wider set of sustainability deliverables. And across both these sub-asset classes, issuance has been steadily increasing over the last few years. And then on the public equity side, there are many, as you know very well, there are many ESG screened funds and ETFs that avoid certain high climate risk exposure sectors like fossil fuels or coal-fired utility. But it's not just avoidance. Investors can also proactively participate in the emerging solution set. The energy transition theme is truly a once-in-a-generation opportunity for investors to partake in opportunities that are moving the world towards more renewable energy sources. According to a Bank of America study released earlier this year, the total market size of climate change mitigation, is poised to grow is to 1.25 trillion to 2.34 trillion by 2025. According to International Energy Agency's 2020 Energy Outlook, the share of renewable in the global power generation mix is projected to be as high as 69% by 2050. It currently stands at it's hovering around the 25% mark. And this is not just coming from a think tank like IEA. Even oil and gas companies themselves are investing heavily in renewables, and they see that companies like BP and Total have predicted that renewables will be growing at the fastest pace amongst any other energy sources in history. So energy transition is a very big opportunity set. And it's not just solar and wind power generation when we talk of energy transition, it's also storage and battery. And then of course, the trend that we all hear of is the electric vehicles trend. And EV is not just in the passenger in the passenger car, but it's also commercial EVs that investors are closely tracking. There has also been an uptick in early stage funding, with technology maturing and with cost coming down. There has been an uptick in early stage funding for climate tech companies, and PwC came up with an estimate that pool has gone up from 418 million in 2013 to roughly about 16 billion last year. So, and again, I would be remiss if I didn't mention that the market size and opportunities are expected to see a steady growth, at least here in the United States, under the new administration. The president-elect Joe Biden's $2 trillion climate action plan has very ambitious net zero emission targets for the country. His plan also includes the goal of carbon-free electricity generation by 2035. So there are ambitious targets in there, and that will definitely propel the marketplace forward. So that's on the climate change front. And although I've spoken for about 2 minutes now, I've just barely scratched the surface. There is so much within the climate change mitigation and energy transition space. Moving on to racial equity, I'm stating the obvious here, but we have a lot of ground to cover. Information is not of institutional caliber, it's sparse in most cases. So let's take the example, let's talk of public equities for a minute here. There is very little information around racial composition of workforce of listed companies. Although I must mention that there have been two initiatives that caught my attention, at least in just the last one, that's trying to tackle this problem. So one is Fortune and Refinitiv. They have teamed up to launch a new initiative called Measure Up, and they are looking at companies and reporting on their diversity and inclusion metrics. And now that will become part of the Fortune 500 list going forward. So that's something to keep an eye out for. Other is the ISS newly launched ESG US Diversity Index, in which they are looking at companies and looking at both ethnic and gender representation of board and management teams. So that's another sort of development to track. One shameless plug here, Blue Dot is working closely with one of our partners. It's called Grid 202. It's a DC-based RIA firm, and we are developing a separately managed account strategy with a racial equity lens. So it combines rigorous financial analysis with rigorous D&I metrics. So more details coming soon, but something that we are very excited and we are very thrilled to have a partner like Grid 202. Now moving on to private markets, the opportunity set is expanding. There are venture funds that have minority and women GPs investing in underrepresented founders and or investing in companies that serve underserved communities of color. There are institutional investors who are asking their external money managers to take diversity and inclusion very seriously. So most notably, there have been a few such announcements, but most notably in October, Yale University's CIO said that now they will start to evaluate their 70 external money managers on an annual basis on the gender and ethnic composition of their investment decision-making staff. So hopefully that is a step in the right direction. And when there is demand from investors, that's of course a big propeller for the space in whole. And also racial equity investing strategies. You can also look at community investing notes that allows investor to invest in place-based CDFIs, high impact businesses, and local not-for-profits. So again, it's a small, we're not there yet. There is a lot of work to be done, but the opportunity set is expanding. And in conclusion, when we talk of understanding racial equity investing, there are many, many voices out there who are much more qualified to speak on this than I am. There are some incredible Black women investors, financial advisors, philanthropists, researchers who have been doing just tremendous work trying to understand the intersection of finance and racial equity. So we list down some of their names in the transcript for anyone looking to dig a little deeper into this.
Yes. Sharadiya, thank you for all those excellent points. And listeners, if you want to learn more about any of these topics, we are definitely taking notes, and we'll have resource links on our website for you to check out. Now, I like what you said about energy transition being a once-in-a-generation opportunity. At Just Invest, we occasionally get questions from advisors who are skeptical about impact investing. But you've actually taken it in the opposite direction and call impact investing future-proofing. Can you talk to us about the risks that you see for advisors who are not implementing impact investing?
Right. So thank you for picking on that. I'm glad that it resonated with you, the expression future-proofing. We call it future-proofing because we believe that by disregarding ESG risks and opportunities, an advisor or an investor, they are disregarding significant financial risks and opportunities. Say, for example, if your portfolio is not positioned to take advantage of the imminent energy transition, you are very likely to lose out on compelling opportunities. Conversely, if you are not considering the climate risk exposure of your holdings, or the asset devaluation risk. And again, it's not like climate risk or the stranded asset risk will manifest in the long time. It's in the long term. It is already happening. Just the extreme weather events and the very unusual weather patterns of 2020 alone. It is a now risk, right? Australia, California, Louisiana. So it is a now risk. So therefore, if you're not factoring that into your scenario planning, then you are not fulfilling, one can argue that you're not fulfilling your fiduciary responsibilities. The other trend impacting all of this is the very significant demographic and cultural changes happening in our society that is impacting customer preference. Customer preferences are shifting and evolving. Issues like companies' labor practices, procurement practices, data security norms, these issues have become much more transparent now and much more widely scrutinized, right? Than even 5 years ago. So machine learning now allows real-time scouring of unstructured data to identify these hidden risks. So what we are proposing is that all of this should be part of the full information package that a portfolio analyst or a portfolio manager should consider. And that's what we mean when we say future-proofing.
That's great. Yes. And I think we can all agree that we are living in very interesting times and there's a lot of change. So it makes sense to incorporate all of these larger trends when portfolio managers consider how to future-proof their practices. Well, Sharadiya, I'd like to wrap up this episode with one final question. Could you share some advice and resources for our listeners who are interested in taking action? How can they learn more?
Right. So I would say, mainstream financial media is a good place to start. Mainstream financial media is definitely devoting a lot more real estate to ESG and impact investing. So all the usual suspects, the journal, Barron's, FT. FT has a dedicated corner called Moral Money. And then there are ESG and impact investing exclusive platforms like Responsible Investor, ESG Today, which is a newsletter, Impact Alpha, which has been reporting on all things impact investing for a very long time. And then, I would definitely encourage listeners to check out the case studies of UNPRI and SASB. SASB is Sustainable Accounting Standard Boards. They come up with periodic case studies featuring practitioners talking about their approach to ESG integration across asset classes, which is extremely helpful. And finally, this channel, the newly launched Just Invest Women in Impact series. I think the channel is shaping up to be a great platform for folks interested to hear about the different facets of responsible investing from practitioners and the guests that you have already featured, Sophia from World Resources Institute, Jennifer from 280 Cap Market, and Claire. I have learned immensely from their perspectives. So thank you for doing what you're doing in sharing the knowledge.
Oh, thank you.
Yeah, thank you. Well, we certainly appreciate that vote of confidence from you. And we really do look forward to continuing WinImpact and exploring more facets with impact thought leaders like yourself. Well, Sharadiya, it was great having you join our Women in Impact series. And just to go into all the important work that you do with helping asset managers and integrating their ESG practices, especially, from every single part of the different life cycles. We want to make sure that the integration happens early and often, and especially with the area that you're passionate about, which is climate change. Listeners, please visit justinvest.com to access all of the resources mentioned during this interview and to learn more about investing with intention. You can also follow us on LinkedIn, Twitter, and Facebook. This is a wrap for us. And until next time, let's continue to win impact together. Investing done just right with Just Invest.